Hello, Retos. We are now focusing on fixed assets. Welcome back. If you haven't subscribed, please ensure that you do and you hit that notifications button so you can be notified when it is time to ace accounting. So, with the fixed assets, we're given the information relating to fixed or tangible assets of Tembega Pty Ltd. The CEO is Lee Klo. The financial year ended 28 Feb 2023, right? So that's 28 Feb 2023. We know that it began on the 1st of March 2022. Now, we need to calculate the following: the cost price of the vehicles on the 1st of March 2022, and then we are going to calculate the trade-in value received on the vehicle disposed of on the 1st of June 2022. Okay, so the first thing that we're going to look at is the information. In information A, we're given the depreciation policy, vehicles at 20% per annum, the diminishing balance method, computers at 25% per annum on the cost. So it's important to note the two differences also. And then B, we're given the balances in 2023 and 2022. And then we have some question marks, which we might need to calculate those figures. And then information C, we are given that, or we are told that a vehicle was traded in for a new one on the 1st of June 2022, whereby the new one was costing 260,000. So this will help us in the calculation of the cost price of vehicles at the beginning. So now we have the vehicles with 930 at the end. Remember, this is 2023 at the end, and we have an addition of 260. Now we also disposed a vehicle, and we're given the extract from the fixed asset register, which reflects the following. So we had a Hyundai purchased on the 1st of March 2020 at a cost of 180,000, and the depreciation rate was 20% per annum on the diminishing balance method. Okay, so now lastly, we're told that the profit on the disposal of this vehicle was 5,560. Okay, so we're going to calculate the cost price of vehicles on the 1st of March 2022, which should be our opening balance. So how we would work this out: we say the 930,000 is our closing balance, right? Which is equal to our opening balance, which we'll say it is X. I know most of you do not like X, but it's a variable that we are just solving for. So do not be confused or be demotivated whenever you see X. Well, in that case, we know that we added a vehicle worth 260,000, and then we disposed one that was costing 180,000. Then now we're going to simply solve for X by taking this to the side and also this to the side. And with your mathematics, you know that whenever you take something to the other side of the equal sign, it changes the signs. And then we are going to have 930 minus the 260, and then we're going to have minus 1. Oh, it's going to be 930. Let me actually write it down. And then minus the 260 plus the 180,000, which is equal to the 850,000. Okay, so that's 850,000. And then we need to calculate the trade-in value received on the vehicle disposed of on the 1st of June 2022. Now, we know that the cost, first things first, that the cost was 180,000. But now let's calculate its depreciation. And with depreciation calculated, we can then be able to determine its trade-in value. But before the trade-in value, we're going to determine the carrying amount, right? We are basically calculating the selling price. Okay, so it's 180,000. Now with the 180,000, we are going to look at the accumulated depreciation. Okay, accumulated depreciation. Remember that they added 36,000, and then they also added the 28,800, and then the total accumulated depreciation on the 28th of Feb 2022 was 64,800. Now, this is the same as saying the 1st of March 2022, because remember that the closing balance for this year, for the previous year, is the opening balance for the current year. Okay, so we also need to note that it is 20% per annum on the diminishing balance method. So we're going to say minus the 64,800, okay, which gives us a carrying amount of 64,800, 115,200. We're going to take that carrying amount multiplied by 20%, but the depreciation can not only be 20% because we sold it in June, so we didn't use it for the whole year. Then we're quickly going to do a timeline. This was March, April, May, June, July, August, September, October, November, December, then that's Jan, and we have Feb 2023. So we sold it on the 1st of June. So we cannot include June because we didn't use it in June. We're only calculating the 1, 2, 3 months of use. So multiplied by 3/12. And then we are going to have a depreciation of, let's quickly see, that's 5,760. Okay, so that's 5,760 is our depreciation for the current year, right? So now our carrying amount at date of sale, right, should be 115,200 minus the 5,760, which is 109,440. Okay, and then since it is 109,440, remember that we had a profit that was made, profit of 5,560. So plus 5,560, we're going to take 109,440 plus 5,560. Okay, and then that's 109,440 plus 5,560, and then we have carrying our trading value of 115,000. Okay, then now we're going to look at 4.3.2 and 4.3.3. With 4.3.2, we have the bookkeeper that calculated the depreciation of the computers as 300,000 multiplied by 25%, which is equal to 75,000. So we need to explain to him why his method is incorrect and provide a calculation to support your explanation. So here, every time, I've said it before and I'll say it again, whenever you have your computers, or not necessarily computers, whenever you just have assets depreciating on cost, right, you need to check whether an asset is fully depreciated or not. So you always need to check out if an asset is fully depreciated or not. They will not tell you. That is something you need to keep in mind, and there are marks for that, right? So we know that the computers are worth 300,000, and we were given accumulated depreciation for 2022 as 262,500. So that should have been our accumulated depreciation at the start of the year, which is 262,500. Okay, so now let's just quickly test if these assets are fully depreciated. So our carrying cost price, rather, we know it's 300,000 multiplied by 25%. We have already been shown this, and we were given 75,000, right, which is this calculation. Now when we take 300,000, then we subtract the 75,000 depreciation, then we also subtract the 262,500, we're going to have, okay, let's see, minus 75,000 minus 262,500, and then we get a negative balance of 37,500. So now we cannot show an asset at a negative balance, right? But we can only show it up until 1, right? So we need to take that negative balance, and we are going to use the carrying amount, not the carrying amount, the accumulated depreciation at start, right? To determine the carrying amount. So we had 300,000. Okay, let's just use our answer book. We had 300,000 minus the 262,500. So our carrying amount should have been the 37,500 at start, right? Now our depreciation, because if we use the 25% depreciation percentage, we will then have a negative balance for this asset. So what we need to do is to make the carrying amount or the carrying value of this asset 1 rand, and the value of the depreciation will be the 3. So depreciation is equal to the 37,500 minus 1, right? So that will be our depreciation for the year, because we want to make the carrying amount 1. So it's 37,500 minus 1. So our depreciation is 37,499. So now we need to explain to the bookkeeper why his method is incorrect. So the asset, or the computers are fully depreciated. Therefore, their carrying amount, or carrying value, so let's just use carrying amount, should be 1, right? So it should be 1 rand because it is fully depreciated. Remember that the carrying amount, or the carrying value, when we opened on the 1st of March was 37,500, but now it needs to fully depreciate. We are going to take this whole 37,500, but we also need to keep in mind that the carrying amount cannot be 0. It can only be at 1 rand, right? So for the carrying amount at the end to be 1 rand, we are going to subtract the rest as depreciation. That is why the 37,499 is our depreciation, because we want this 1 rand to remain as part of our carrying value. Okay, hope that was nice and clear. And then we are going to look at the last question, which says the CEO Lee Klo wants to improve the company's image by donating the old computers to a local school in March 2023. So he also plans to upgrade the software on these computers at an extra cost of 20,000. The shareholders feel that the old computers should be sold at a profit. And then explain 2 possible points that the CEO can use to support his decision. So here we're looking at the donation of these old computers. As you might have known, in accounting, we are also encouraged to learn about the corporate social responsibility, and also the ethics, and also about the tax consequences of donations, right? So whenever you are donating something to people, whether it's in monetary value, or if not, the monetary value of that certain asset will be determined, and then SARS will give you a deduction on your donations. Will give you basically a deduction on tax, so you might be paying less tax depending on whether such a donation qualifies for deduction. Okay, so here this is a positive image building for the company. Okay, and we also have possible tax deductions on the donation. And then lastly, this is let's say good corporate social responsibility. Okay, so that's good corporate social responsibility, right? So that is the end of our fixed or tangible assets question for the 2023 November paper 2 accounting. Thank you so much for watching. I hope that was useful. Don't forget to subscribe, like, and drop a comment on any accounting videos or topics that you might need help with. I'll definitely see you in the next video. Cheers.